Edward Brown, host of The Best of Investing, here to remind you to tune in this week on Saturday at 8 p.m. Our guest is going to be Christopher Morin. You're not going to want to miss this show. That's The Best of Investing on Saturday at 8 p.m.
Thanks for the great intro, Edward. It's a pleasure to be here. Well, it didn't happen overnight, but it did happen over what I think, a relatively short period of years through just intentional investing. Specifically, Edward, I think the catalyst was where my wife and I, we decided to invest outside of our local market. We started investing when I was a young captain in the Air Force locally because that's what we knew and felt comfortable with. However, we learned that, hey, the U.S. is a diverse landscape for real estate investing, and we strategically started to identify the best markets throughout the country where we had the best returns, best cash flow, best appreciation, and then we started investing in those markets, and then that compounded over time and allowed us to scale our portfolio to replace our active income. So at the time, I was stationed in Grand Forks, North Dakota, with the Air Force. That's my first duty station. No, we live in Colorado now, and that was I've been investing for 15 years now and have a very large portfolio. But when we were first starting to invest, yeah, I mean, I bought a duplex, used a VA loan, house hacked it, lived in half, rented out the other half, found the beauty in real estate, and then just bought a second one from there, and then a third and fourth one. But yeah, intentionally investing out of state where we could diversify and access better deals, that really was a catalyst to allow us to scale. And that's essentially the birthplace of rent to retirement. Is the same thing that we help people do is, regardless of your investing experience or your geographic location, we allow you to access deals nationwide that best fit your goals. I think, well, technically at real estate investing, I mean, I kind of consider my college years in optometry, which would have been like that 2000, I guess, 8 through 11 period. I actually did like an rent arbitrage type of thing where I would rent out a house and then rent out the rooms. The first house we purchased, I think, was, well, I guess it would have been 2009 or early 2010, where we bought the duplex and lived in half and rented out the other half. Yeah. Yeah, I mean, and this is an interesting thing. We can talk about market cycles and things like this. I mean, coming out of Coming out of the 2008 kind of crash, I guess you could say, real estate prices were fairly low. However, in a lot of parts of the country, actually, real estate wasn't that affected. Like in the Midwest, we really didn't have that much of a decrease in pricing. So, that's where we started. But I always tell people, Edward, that I think our success comes from consistently investing. There's not been a year over the past 15 years that I have not bought real estate, regardless of market cycles, interest rates, whatever the case is. We've consistently grown our portfolio and just staying true to the fundamentals of real estate investing. It can be done. Well, originally I was thinking maybe Lisbon or Reykjavik, but I don't know. I guess that's true. I was just thinking west. Yeah. So my wife likes to travel. Yes. All right, so Rent to Retirement, we're the nation's leading turnkey investment company, and that's a kind of a buzzword. So essentially, what we do, our mission statement is to make the best deals across the country accessible to everyone and do that in a turnkey manner where we essentially handle everything for you. So, what we do, Edward, is we find the best markets throughout the country for things like cash flow, making sure we're in the path of progress, population growth, et cetera. We want to be in areas where we know we have strong fundamentals for real estate investing, and then we build our local teams and systems in those areas to consistently offer turnkey products. A turnkey investment product is a home that's either been fully renovated or newly built. We mainly focus on new construction, leased and managed by our team. So investors, regardless of what their experience level is or where they're located, maybe in Europe, in Lisbon or wherever, they can have access to invest in some of the best locations throughout the U.S. and build a diversified portfolio where we are coaching and guiding them how to do that and handling all the day-to-day management, so they're not having to buy themselves another job being a property manager, especially from a distance. Yeah, well, it's been a it's been a long process, but we have best practices and procedures at this point in time that we follow, and we either partner with local teams that have a good track record and that we can vet thoroughly. And there's a whole laundry list. We don't have enough time today to go through all the bullet points that we go through. At the end of the day, we have to like test them, right, and invest with them and make sure that they meet certain standards. But if we can't find a good property manager, contractor, insurance provider, lender that services all these areas, we develop our own, right, and we build that from the ground up. Certainly. So we are helping people build their individual portfolio. So, Edward, if you were a client of ours, you'd come to us and we'd first want to have a consultation with you to learn about your goals, criteria, timeline, resources. Even if you're brand new to investing, if you're just interested to learn about real estate investing, we want to have a consultation to understand, all right, this is where you want to be, these are your goals, and how are we going to help you get there? And how do we help you expedite those goals to ultimately create financial independence and retire early through real estate? Hence our business name, Rent to Retirement. But we walk you through the entire process. First, we want to identify what your financial position is. Now, you are buying properties, right? We're not raising capital from people. We're not partnering with you on the deals. Like, we're helping you buy your own portfolio. Most people are using, your Fannie Mae, Freddie Mac loans where they're putting 20% down. Average home price is about 200,000. So, $30,000 to $40,000. Although we have some ways to buy properties with zero money down. We help you get qualified with the lender that you want to work with, and we have lender recommendations. And then it's a normal purchase process. Identify the market, put the property in a contract, go through due diligence, close on it, have it rented out. We get paid by, like, builders. We build houses and we sell them. So that's an important thing. We don't charge our investors anything. Our fees are built in to the sale of the property, right? Just like a home builder would, or a seller. About 70% of what we do is build to rent, ground up construction. So we are builders and property owners and sellers. Well, we don't actually do the management. We source through third-party teams, and you're not required to use those teams, but these teams are teams that we've vetted, right? So on the existing inventory that are homes, these are homes that we acquire, and then we rehab them, and then we place a tenant in them and sell them as a package deal to an investor. hmm Yeah, so if you're buying all cash, we'd evaluate in a cap rate, and that's usually between an 8 to 12% cap rate. If you're using leverage, putting 20% down and financing, yeah, your ROI could get upward anywhere from 15 to 20%. Um, you know, yeah. Well, the coastal markets, generally speaking, just don't fit our general investment model because they're too expensive. They don't cash flow. We like the Midwest and we like the Southeast. The Southeast is where the population's going, has affordability. Again, average house price point of $200,000 to $300,000. That's going to rent out close to that 1% rule and provide a positive cash flow as well as growth and appreciation over time. Yeah, no, we, no, we got a lot of Lemasters out there though. Oh wow, there's a good trivia. I have no idea. Why probably some sport indoors in the court, right? I would think, but volleyball. There you go. There you go. I think so. Yes. They can go to our website, which is renttoretirement.com, renttoretirement.com. They can also text REI to 33777 and connect with our team. Also, we have plenty of resources on our website. We have a podcast, YouTube channel, investment calculators, a lot of market data. So, any information you need, that's the best place to go. Well, that's been an evolution. This is a personal thing for me. It's been an evolution over time. When I first started investing, like many newer investors do, we all tend to be hyper focused on cash flow. That's tangible, right? It's your return on investment. The reality, what I've learned over time, is that you build wealth, true wealth, generational wealth in real estate by all the other benefits of investing in real estate. We use real estate, an acronym called the ideal investment. These are all the ways you grow your wealth over time. I is income, your cash flow. D is depreciation. E is equity that builds up as the tenant pays the loan down if you're using leverage. A is appreciation, right? All real estate goes up over time, regardless of short-term fluctuations. And L is leverage. Leverage is what really allows us to expand our portfolio. But depreciation in the tax benefits are something that real estate far exceeds any other investment class. And we are highly incentivized by the IRS to buy real estate by rolling our money back into real estate and growing our portfolio. And it allows you to really be a strategic investor to grow your wealth dramatically more than, say, other investment classes. Yeah, what you're referring to is the cost segregation study where you basically you do accelerated depreciation. But I mean, just to clarify, any investor, just by buying real estate, you do get, like, everyone gets normal depreciation. And you have things like the 1031 exchange where, hey, you can actually roll your properties into other properties without having to pay capital gains, and you can do that in perpetuity forever. So I mean, all these things combined really help to excel and grow your net worth and compound over time. Well, there's a lot of interesting things the government throws out there to do, but one thing that has been consistent over time is that the IRS incentivizes people to be real estate investors because it stimulates the economy, right? We have a housing shortage of over 7 million homes in the US right now, so which is the worst it's ever been. So providing housing for people is a human necessity. And that's something that we really enjoy, not only for providing the opportunity to house people and contributing to society, but also it's a very stable and residual asset class. Well, this is a statistic that just came out probably a month ago, and I'm not exactly sure all the data points that are going into it, but I will say that we've seen an increase over the past year, especially post-COVID, of people coming into the country as well as babies being born. So, I mean, the population isn't slowing down, right? So, well, it's really on an individual basis on your goals, but yes, the average person is probably using a conventional Fannie Mae Freddie Mac loan. You can have 10 of those under your name at any point in time, where you're putting at 20 to 25% down. I mean, you're usually cash flowing very well. It gives you a good mix of not being over leveraged. I mean, we do have loan options where people can buy property with 0 or 5% down. But you have to be conscious about the cash flow with a highly leveraged property. But typically speaking, I would say most people buy with, yeah, about 20% down. Well, I think you kind of hit on that point earlier on, are there areas that we don't invest? And there certainly are. I mean, if you need to evict a tenant, we want to be in states that have landlord-friendly legislation where you can get a tenant out in a reasonable time. And also being conscious about the asset class, right? We don't do low income type of investment properties. So catering and advising to better quality tenants usually ensures more occupancy. I think well, I do remember watching, vaguely. I thought they just called him a skipper, but something with a G comes to mind. I don't know. Oh, there you go. All right. Well, hero story, I guess. I mean, we've helped a lot of people be successful real estate investors over a long period of time, but I'm going to say a hero story of one of our recent investors, which was able to retire from his career path in 3 years through investing in real estate strategically. And this is someone who was a public service worker. I won't give his last name. His first name is Bernard, but Bernard was basically a trash man, picking up trash. And he basically got a small inheritance from his mother who had just died, but he got laid off during COVID. And he was really stuck on not knowing what to do, and he didn't have other sources of income. And so we were able to help him put that money to good use, as well as some other savings he had, and actually excel and surpass his income in the service industry, where he didn't have to go back to work. And so when we have experiences like that, really hits home. And I think that's really what reminds us why we're in this industry. We're very passionate about real estate and helping people accomplish their goals. I can, have all sorts of interesting stories myself too that I've been able to accomplish over my path of investing. Well, I mean, the Air Force, I think I served the country for about 7 years. And by the time I left the Air Force, similar type of story, through intentional investing in real estate, I was able to replace my active income in real estate, and then eventually do the same thing for our private practices in Colorado that we had. So, and now we're at the point where we're able to create a generational picture where our children will be set for life, and it wasn't easy. It didn't happen overnight, but that's why we're so passionate about real estate investing, is because we think we know it's the most predictable path to wealth. And if you can stay consistent to investing in good areas with good teams, like, this is this is pretty much the average man's way to create in financial independence. Yeah, exactly. Well, it's combining all the things that we kind of already talked about, right? A lot of the tax benefits. So the first thing, I kind of covered this in one of my recent podcasts about the things that have really allowed me to be successful. And then I paralleled that with some other successful real estate investors that we've interviewed. But the first thing is, I got started and I never stopped, right? So many people sit on the sidelines and waste a ton of years just not doing anything, because either they're trying to time the market, which never works, or they just get analysis paralysis, or they keep putting it off. So I got started, I never stopped. Secondly, I was intentional on where I invested. I shared in the very beginning that being intentional on the location that we invested, not just in our local market, because that's what we knew and felt comfortable with. That's really what allowed us to excel our portfolio, because there are a lot of markets that are growing dramatically right now, where the population is shifting. The third thing that I did is I maximized all my resources. We all run out of capital at some point in time. There's only a limited amount of money we can put down on another down payment. So I took out a HELOC on my house. I cashed in a retirement account. I brought in partners to help me invest as well, to help me scale. I maximized my tax benefits. We run an 8-figure business in addition to the portfolio that I talked about. And every single year we write off all of our taxes through buying real estate. That's a ton of money that we save that we can reinvest, right? That alone has allowed us to excel our portfolio. And then the last thing is just surrounding myself with like-minded people and real estate professionals, right? Real estate specific CPA, attorney, all the people that you need to be successful and having that team. So those are the 5 things that has allowed me to be successful. But what was your question, Edward? We own a portfolio of about $60 million of real estate, and that's across multiple different assets. And I think we have about 60% leverage on it at this point. I mean, I like leverage and we maximize leverage, but we do it responsibly, and leverage is paid down over time, right? So, some of these loans we've had for over 10 years and we're well into the principal on those. Refinancing doesn't always make sense because if you can take a lower interest rate, right? But I'm always refinancing. I'm always selling and 1031 exchanging. We're always trading up. We have some properties that are paid free and clear, but it makes sense if it makes sense at that point in time. I think you have to identify what a good market is for you, but there's a lot of different markets available. What we look for and what we try to identify is a market that is, as we mentioned in the path of progress, we want to see population growth. We want to see economic growth. We want to see a diversity of industries, not an area that's just reliant on oil or gas. We want to be investing in these areas for a very long time. We like affordability. We want to be below the median house price point, which is around $400,000 in the US right now. So we want to be well below that. That gives us the highest demographic for both renters, tenants, as well as home buyers when it's time to sell the property. And we want to be in areas that have landlord-friendly legislation, low taxes. I mean, at the end of the day, we have a long laundry list, but economics 101 comes back to supply and demand. If you're in an area, as you mentioned previously, Edward, everyone needs a place to live, right? Housing is a human necessity. If there is an undersupply of housing in this area, I think it's, you probably have a good opportunity to build an investment portfolio there. Yeah, I didn't get to share the zero story, but I have plenty of those, right? All of us real estate investors, we all have the scars and bumps and bruises from not every property works out like you anticipated, but staying consistent through those deals, I think, is what allows you to be a successful investor. Man, so many things. I'll say this since we're talking about out of state investing. The first deal I bought out of state was the worst deal I've ever purchased, and that's really the initiative behind building our business and building systems around how to identify markets and do it the right way. I bought a property that was recently rehabbed by someone else. So it was a beautiful rehab in a terrible location. The numbers looked really good on paper. This was Southside Chicago. They call them two flats. They're duplexes in that area, two different level. And the property just performed terribly. The tenants were moving out, damaged the property. We had to go through an eviction. Chicago Housing Authority was very difficult to deal with evictions. Basically Section 8 rent, and we ended up losing a ton of money on those deals. But I think looking at those were our first out of state deals. But those were a lot of lessons learned. We call that the school of hard knocks, all right? But we improved from that, and we took those lessons that we learned to invest in better locations, build better teams, and ultimately be significantly more successful. I mean, that's on an individual basis. Typically not, because our owners are looking to own long term. But if you have a tenant that maybe you're helping them, and you can have a higher than average cash flow and ultimately make the deal make sense. We have had people do that, and we can help them navigate that. But it's a little bit more of a high level strategy. For anyone that would like to get a hold of us, visit renttoretirement.com. That's renttoretirement.com, or text REI to 33777. Let's go. Good question.